Welcome to Avenue Insights. Information relating to investment approaches or individual investments should not be construed as advice or endorsement. Any views expressed in this podcast are based on information available at the time and are subject to change without notice.
Welcome to Avenue's Q1 2026 podcast, and looking forward to the markets here for the coming year. First of all, I'd like to highlight that 2025 was a great year for us, but many of the themes that were successful last year are really rolling into 2026, and sort of highlighting that had real movements in just within the stock market, but also country to country. We're going to talk about how Canada's really rebounded. But always trying to emphasize at Avenue, we're looking for great long-term businesses, and we're really trying not to jump from sector to sector, company to company. We really do own these things long-term. So just having that as framing our conversation. But the biggest theme, and where we're talking about how challenging Canada was in an environment 12 months ago, and how we were looking forward to last year and how that might change over the year. And we had this dramatic, repricing in the Canadian market, but we've also seen what those changes have happened. Those incremental things that have been implemented by the Canadian government policy over the year, and now we can actually put a term on it. So, Bryden, you've written this great essay, really sort of defining. Let's pick on a word. You've used the term national capitalism, and so we want to dig deeper into that now. And say, because this was sort of aspirational a year ago, you can actually really construct a pretty detailed argument about what we see happening. And again, from an investment point of view, it's not what we'd like to see. This is you're being very realistic about the frame that we have, the framework that we're investing in, and then how do we actually tackle that?
Yeah, I think the big theme that's happened, and the U.S. was really the first to lead this, but it's the focus of a government policy on domestic economy priorities. And the U.S. started to do this, slightly before the pandemic, but then definitely after. And the rest of the world was much slower to adapt. We would get this sort of repeated comment or question of U.S. economy is the strongest in the world, quote unquote. Europe is weak, Japan is weak, Canada's weak. Why would I not invest in the U.S.? And why would I have anything invested in these other parts of the country or other parts of the world? And I think the hard part to it, and we've tried to sort of explain this and show it in many of the quarterly letters the last several years, but it's hard to examine the U.S. economic performance without observing just how much of that has been fueled by government spending into the economy. And this perception of a strong economy has changed, from sort of pre-2009 levels, where it used to be, economies across the world were very private sector driven. Where was private sector investment? Where was private sector consumption? Were those matching? What was growing faster than other parts of the world? And where were global capital flows moving based on that? And I think essentially in the last 5 years, you had the US, but now Europe, Japan, and Canada come to the recognition that the populations in all of these countries want the government to be encouraging and really now forcing domestic private investments, because ultimately we've been in this since the pandemic, but there's this sort of global economic malaise and concern about economic conditions that have existed from even prior to the pandemic. But these have all come to a head in recent elections, whether it's in Europe or Japan or Canada. And going back 12 months ago in Canada, where we talked about and we're getting feedback from clients, concerns about, a comment that would sort of reiterate amongst all of us was Canada and the Canadian dollar are completely uninvestable. You don't understand, guys, how bad things are. That was repeated over and over again. That was the prevailing sentiment. So it's not to discount that. That was the sentiment. That was the positioning. And what's happened since then, you've had strong performance from the Canadian stock market, and you've had a strong performance from the Canadian dollar. How could that be possible? And it's, again, what we try to highlight is when everyone thinks something's going to happen, the recognition has to be that a lot of the times every other investor believes the same thing and is positioned for that, what's most likely to happen at those inflections are the complete opposite. And so now we've had an election in Canada the last 12 months. We have a new government. And the focus on Canada, where we're probably the latest to the party in terms of G7 nations, but it's to focus on what are our domestic economy priorities. And I think what we tried to highlight in the letter is just in a very simple prognosis, which is, again, how you highlighted it. We're not trying to, as investors, we don't go about wishing the world would look like any different scenario. We try to observe and then to interpret what is happening, why is that happening, and then what does that mean from an investment perspective and from an economy perspective. And we're going to accept that as what's happening until something else happens. We're not trying to imagine the world differently than it exists. But in Canada, we've now sort of turned our lens internally and said, how can we be better at reorienting our economy, which is, in the letter we get to a couple topics, but there's a laundry list of things that we didn't do over the last 10 years. We now have to do.
I'll come in and I'll get you, to attack that directly, but it's just sort of just as a summary. I just want to make sure that this one key point is that specifically from a federal government point of view in Canada and most major countries, the market will solve all sorts of problems and it will allocate capital, and money, all our money is allowed to move around how it wants to. And the government redistributes, and runs a social welfare state. Mm-hmm. And now the difference is actually, we actually do have to have a strategic economic policy. And so we're implementing those things. With the conservative governments, their platform a year ago was to be much more, deregulate, still let the market, be able to build things and allocate capital. This term, and again, coming back to the Carney government, is much more of let's put guardrails on, like, we're going to do a lot of those things, and so this is why it's propelling the Canadian economy. They're going to move money into the economy, but we're going to put guardrails on where it is. And again, you came up with it's really highlighting this term national capitalism.
Yeah, and actually, as an aside, on that topic, which is, again, if you think about this if you were to come up with this policy in 2005, this sounds great. But even in the last election cycle, the Conservative Party was talking about how TFSA contributions, if you're investing in Canadian stocks, that doesn't count towards your TFSA contribution. But if you invest in international companies, it does. Imagine from any investment manager in the country trying to administer that. Like, that is absurd. But that was where we were 12 months ago. We're just in a completely different ballgame now in terms of trying to reorient domestic savings into our domestic economy. And again, the current government and we highlight this in the letter, we at all times try to remain nonpartisan, because you can very quickly lose your mind spinning around these sort of partisan topics. But it's a theme that has emerged in all countries across the world. If a government wants to be elected, it has to come up with a solution to improve the domestic economy. What does that mean? It means encouraging domestic investment in the economy. And so as investors, we always try to think about, well, what does that mean for our individual businesses? What works? What's at threat? Are there opportunities that we need to look at given light of that? And I think it's just the spin has happened so quickly because the sentiment around Canada was so negative a year ago. That's changed. And again, it's not to say that Canada doesn't continue to have its issues, and you can make a counter argument that the current government is slow walking these policies and there's not enough of a surge of sort of enthusiasm about where we need to go as a country. All of those things are completely fair, but you at the same time cannot discount the environment has changed. We now have a government that is trying to recognize what the issues are. And the more that domestic savings are funneled into domestic investment, what we're trying to observe and be aware of is what companies do we own are positioned to benefit from that? Where might there be challenges? Does that mean higher interest rates or higher inflation or stronger currency? All of those things impact Canadian investors.
So why don't we finish off on a note and just sort of saying, bringing it very specifically, because this is why we might be building, biotech ideas and software ideas. It's actually a lot more tangible, like initially straight up front. And the example you gave was something simple like Toromont, which is a heavy equipment dealer in Eastern Canada.
So Toromont's a business we've owned for going on 3 years. We had looked at it for many years. It's a quality, essentially the largest Caterpillar dealer in Central and Eastern Canada. It's a quality business. The challenge we had 5 years ago or 10 years ago is, okay, it's a great business, but it's kind of expensive, and we're concerned about relative levels of domestic investment in Canada, and will they sustain themselves from the private sector, and is the valuation of Toromont justified given those concerns? That was a challenge we had 5 years ago or 10 years ago. We're now in an environment where it's very clear with the most recent budget and any kind of even sort of middle of the road private sector economist perspective is like, there's going to be larger investment in Canada. There's going to be larger investment in infrastructure. Given that,
hard tangible things.
Tangible,
it's real money building real things.
These are real money in the budget, spending money into the economy. If you want to build, and the equation we gave, or the simple sort of eye test was, and at the time we owned another company which will sort of be tandem with it, but if you go to any construction site in Canada, they have guaranteed at least one Caterpillar machinery, and they probably have a John Deere machinery. You cannot build anything in Canada without one or the other. And so from an infrastructure perspective, Toromont, as the largest dealer for Caterpillar, they are there on the front line, delivering machinery, servicing machinery, providing rental machinery to any parts of the construction economy. So from that perspective, you'd say there is a long runway of growth for a quality business like this. And if we're going to meet these investment levels in Canada, it cannot exist without Toromont. The question we then have to wrestle with is, well, what level of that is priced in? What level of profitability will that generate? Is the market then too optimistic about future potential? Which is all of the kind of gray zone about what we always try to do. But it doesn't change the fact that this is a really excellent Canadian business. It's one we continue to own, one we continue to like. And despite of what's going on right now in the tech sector in the US or software, Toromont, they had results the other day and they had great results, and the stock's hitting new highs. And I think the environment around investment in Canada, I think is a long-term durable thesis for a business like Toromont, and it's one we continue to own based on all of these things we're talking about, which is, again, to sort of bring it all back, is it's not, when we try to analyze these dynamics going on in the world or global economy or macro factors, we always try to bring it back to, well, what does that mean for the companies that we're investing in? Does it make things better? Does it make things worse? And then it's just trying to filter it in, because ultimately we are quality business owners and we have to bring it back to that level. And that's what we're trying to do in this letter, is like, here's what's happening, here's why, but what does it matter for the companies we own? And let's try to find things that benefit and try to avoid things that are missing out.
That's great. And I'll finish up on, because the standard, in the stock market case, because it's very, very concentrated businesses in Canada, it normally means, Canada just means here are banks, here are resource companies, but you can drill into Canada deeper and find these other special businesses. There you go. Thanks very much.
Awesome.
Thanks for tuning in to Avenue Insights. For more information, insights, or services, check out our website, avenueinvestment.com. Link in the description.